So if you're running a daycare business and you've got paid employees, you probably have workers' compensation insurance. But what are the things that you need to know that maybe you don't know right now that could cost you down the road? I want to walk you through a couple of them so that you can prepare accordingly. One, you need to spend some time looking at how your employees are classified on the policy and making sure it's correct. Workers' compensation is based off of one, job duties, which that tells you how risky the work is, and then two, payroll. That's how companies measure how big your exposure would be. If either of those things are not correct, you're going to probably end up paying more, or you're going to get caught at an audit. So let's talk about audits for a second, because this is another thing that you need to be wary of that can create pain for a lot of business owners. If your payroll is not correct on the policy, the insurance company is going to catch that at the end of the year in an audit. Since workers' compensation is based off of payroll, if the payroll is either too high or too low, company wants to square that up at the end of the year. And if your payroll is actually lower, they want to give you money back. If it's higher, they want to get more money so that their number is working out on the back end. One of the ways that you can get caught and end up paying more in a way that's unexpected is if you've got people that you're paying on a 1099 that don't have their own workers' compensation insurance. Just because you pay someone on a 1099 instead of a W-2, it does not mean you're not responsible for workers' compensation insurance. If you pay someone and they get hurt on your job site, you can just assume that you're responsible. So in a daycare environment, maybe you bring someone in to do a special demonstration on reading or magic, or they're bringing in a display for small animals. If they're coming into your facility and you're giving them money, you need to check to make sure that they've got liability and workers' compensation insurance. Especially for purposes of workers' comp, you want to make sure that doesn't come back on your audit. The last thing that you need to pay attention to is if you've got an experience modification factor. And this is a little complicated, but workers' compensation is the one policy where you really control how much you pay because you're compared against your peers. If you've got more claims and you've got bigger claims, you're going to pay more because your experience mod is going to be over 1. It's going to act as a multiplier, and you're going to end up paying more. If you have less claims and smaller claims, you're going to pay less because that experience mod is going to be under 1. It's going to act as a multiplier. You're going to pay less. So make sure when you're going through and looking at your workers' compensation policy, you're double checking your workers' compensation claims, how much was paid out, making sure they get closed promptly so that your experience modification factor can be as low as possible. So there you go. Went through a couple of things here to help you understand some of the gotchas with workers' compensation insurance. 1, making sure people are classified correctly. 2, making sure that your independent contractors have their own workers' comp so they don't show up on your audit. And then 3, make sure you're looking at your experience modification factor so that it's as low as possible so that you're not paying more than you need to. I'm Daryl Henry with Bitner Henry Insurance Group, and we serve those who serve others.